How do you select cryptos with 10x return potential, right? This is part one of a series of explainers on how to stack the odds in your favor. Whatever you do not throw money at every shiny crypto that catches your attention. There are a lot of them out there, there are thousands of them, all right? If you were to just throw money at each and every one that comes out, for no reason other than the fact that they are cryptos, you are bound to lose money. All right. But firstly, a disclaimer, I'm not a financial advisor, and what I'm about to reveal is not financial advice. Okay, I'm just a lawyer and a user of and investor in crypto since 2017. So I've been around. I've seen how cryptos can grow to crazy prices, right? Sometimes from a few cents to a few dollars to a few $100 within a few weeks, within a few months. So I'll be sharing what I've learned on what makes cryptos valuable and how they can appreciate by 10x or more. So I think you're going to like this lesson because most crypto investors have no idea how to even do this. And it's very simple, right? It's just one or two steps, right? Okay, so you want to 10x your crypto investment, what do you need to do? By the way, if you want me to send you a PDF with more details on this lesson, let me know or message me directly and I'll send it to you. Okay, so you want to 10x your crypto investment. What do you do? Okay. First thing is to avoid doing this mistake that many crypto investors make. Stop looking at the crypto's price alone. You look at the crypto that has just come out and it is less than a cent. You get excited because it's so low. And in your mind, you're thinking, if it goes to $1, if it goes to $10, I'm making 10x, I'm making 100x, I'm making 1,000x. While that may be true, price alone means nothing. When you look at crypto's price alone, it's not telling you anything other than what it costs you to buy one of them, and that's it. There's nothing, there's no other signs of anything that a crypto price can tell you. Okay? All right. So what you want to do is to find out the market capitalization of a crypto, or market cap for short, which is what you will get when you multiply the price of a crypto per crypto by the number of cryptos that has already been issued. They are now in circulation, right? So it's price per crypto times the number of this crypto in circulation. You get a market cap, right? So a coin market cap is important because it tells you two things: how big the crypto project is currently and how much room it has to grow. This is very important because for a crypto to 10x its price, it needs to have room to grow. You do not want a crypto project that is already so big and has no room to grow. You won't get your 10x returns, right? Now, it's simple to understand, but most people have no idea how to even look at a market cap. Now, here's an example. Crypto A, its price is 5 cents. So this is exciting quite a number of crypto investors already, simply because it's so cheap, right? But the number of cryptos in circulation for this particular crypto is 20 billion. So when you multiply the price by the number of cryptos in circulation, you get a market cap of $1 billion, which is $1,000 million. This is a huge market cap, right? It's huge. $1 billion is huge. Now look at crypto B, right? Its price is $1, right? Much more expensive than that 5 cents of crypto A, but it only has 10 million cryptos in circulation, which means that its market cap is only $10 million. So that is a very small market cap. Okay, a very small market cap, and immediately you can see that it has a lot of room to grow. Okay, of course there are other factors to consider, but let's take those the factors one by one. And today's lesson is about market cap, right? And something else, all right? But let's look at market cap first. So for 10x returns, crypto A's market cap needs to go from $1 billion to $10 billion. That is an extra $9 billion. For crypto B's market cap, it needs to go from $10 million to $100 million. That's an additional $90 million. So my question to you is this: which crypto has an easier path to 10x? Is it 9 billion or 9,000 million or 90 million? Obviously, the answer is crypto B, right? Because it only needs 90 million, not 9,000 million or $9 billion. In the crypto world, a 10x return can happen within months, sometimes weeks. You know this is true. You've seen it happen. No other asset can do this. That's why there are a lot of investors who just love to invest in cryptos. But you need to know how to do it wisely, right? Not just throw your money at any shiny crypto that comes along. Okay? So if you have $1,000, you will earn $10,000 within months. If you have $10,000, you will earn $100,000 within a month. If the crypto you have selected goes to 10x, right? But not every small market cap crypto is a winner. You need to be aware of this, right? Some will, some won't. That's just the nature of it, all right? So we need to be more sure of this. We need a second filter, right? And the second filter will show real activity for the crypto project, not just hype. If the crypto project allows for activity to be done on its network or blockchain, okay? So what is this second filter? It is called total value locked, or TVL, right? Total value locked is a measure of how much actual money is being used inside a crypto project. All right, it's about utility, not the crypto's price. So let's say you have a DeFi or decentralized finance crypto project where people can, number one, stake their cryptos on its blockchain to secure it, to earn rewards. Number two, lend their cryptos to others and earn interest. Number three, swap their cryptos with other users' cryptos inside the platform, right? All of these functions involve locking up real crypto assets on the crypto network. Otherwise, there is no value to that crypto network. The total amount of crypto's value locked in the system is the total value locked, and a crypto project total value locked is then compared against its market cap to give you a ratio that can be a good indicator of the project's potential upside. So to get the ratio, simply divide a crypto project market cap by its TVL. So market cap divided by TVL. The result is an indicator of whether the crypto project is overvalued, fairly valued, or undervalued. Obviously, you want to invest in projects that are fairly valued or undervalued, not in those that are overvalued, right? Okay, let's look at crypto project A. Its market cap is $300 million, the TVL of 25 million. Ratio is 300 million divided by 25, you get a value of 12. So the price of the crypto is 12 times higher than the amount of money actually being used in the system. This is what the ratio means. The price of the crypto is 12 times higher than the amount of money actually being used in the system. So this project could be, number one, overvalued, and number two, driven more by hype than real usage. So this is a very valuable metric to look at, right? Because it gives you a better indicator. Crypto project B has a market cap of $100 million and a TVL of 80 million. So the ratio is 100 million divided by 80 million, you get 1.25. A ratio close to 1 means that the crypto's market value reflects what's actually being used inside the platform. So this is fairly valued, all right? If adoption grows from here, its price can move up really quickly. So you want to invest in project B, if you can find one, a crypto project that has a ratio that is close to 1, because it's fairly valued. Now, crypto project C has a market cap of $50 million and a TVL of 100 million. So its ratio is 50 million divided by 100 million, 0.5. A ratio of below 1 means that there is more money locked in the system than its total crypto value, which means that this crypto project is likely undervalued, all right? And the crypto may have a lot of room to grow. But note, beware of an MC-TVL ratio that is too low. If it's between 0.7 to 1.0, it's potentially undervalued. So it's worth checking to see if the crypto is overlooked by the market. If it's between 0.4 to 0.7, it's undervalued. It may be underpriced, or if TVL is inflated by unsustainable rewards. So if TVL is unnaturally high. So you need to investigate a little bit more to see what sort of rewards are they giving to investors or to people who are staking their cryptos on the platform, to see whether they're giving too much of a reward. All right. If it is, then it's, you might want to avoid it. But if it's not, then it may be underpriced, and it is a good number to strive for. And if it's between 0.2 to 0.4, this is a distress signal, which means that the market may not be trusting this crypto project. So you want to look out for red flags, okay? And if it's below 0.2, this is a warning to you that this may be a failing crypto or is an unsustainable DeFi farm inflating its TVL artificially. So here are the steps, right? Go to CoinGecko.com and look for projects with a market cap of under $500 million. And then go to DeFi Llama to check their TVLs, and then calculate the market cap to TVL ratio. And if it's between 5 to 10, be cautious, all right? If it's around 1, it's fairly valued. If it's not too much below 1 and its fundamentals are strong, pay attention. Okay. Now here's one crypto that I checked earlier is currently at 20 cents, right? And the market cap is currently at $90 million. You go to CoinGecko to check this number, then go to DeFi Llama and type in ACX again to get the total value log figure. And then to get a ratio, you simply divide the market cap of 90 million by its total value log of 100 million. You get a number of 0.9. So based on what you've already learned, 0.9 is a sign that this project is undervalued. Of course, there are other factors to look at. This is just one of the factors, but it at least stacks the odds in your favor. Right? You're not looking at a ratio of 15 or 20. It's too overvalued. You don't want that. Neither is it too low. Not every pick will give you 10x your investment, no matter how good a ratio is. That's just how it is. Some might double, triple, or quadruple in value only. So while your goal may be 10x, this is not really a bad thing. A doubling, tripling, or quadrupling of your crypto's value is still a good thing, especially when it happens in a few weeks or even in a few months. All right? They're talking about 100, 200, 300, 400% of your crypto's value in a short period of time. All right? So if you want to take profit during that time, by all means, go ahead. Some might drop below your entry price. It will happen, that's for sure. Not all will be winners. That's okay. You simply don't go all in on a single crypto project. You want to spread your bets so that you can protect your downside and let your winners carry your portfolio. That is how smart investors in crypto invest, right? Not just by throwing their money at any shiny coin that comes along, okay? But what if a crypto project doesn't require any cryptos to be locked into a system like Bitcoin? Bitcoin only does one thing, which is to transfer value from one wallet to another, nothing else. Do you still consider these crypto projects or not? Well, I review what you should do in my free PDF because there's quite a bit to go through, and I don't want to dilute the lessons here, which is basically, just two metrics to look at, the market cap and the market cap TVL ratio, right? As a starter for you to stack the odds of a crypto performing in your favor. Okay. So if you want this PDF, let me know just in the comments or message me directly and I send it to you.